Can you guys hear me okay? I think we're good. What's going on, amigos? You guys missed me? I sure missed you. Hope everyone's doing good, having a fantastic week. And I want to welcome each and every one of you back for another Dividend Happy Hour. I know it's been a while. And you guys know I have not been feeling good. Really, I'm feeling good now. I'm 100%. But prior to this, guys, this last week was rough. I was out of commission. It was not good, but I am so excited to be feeling better, number one. But number two, I'm just, most importantly, I'm so stoked to be back here, back in business, and back with you guys for another live stream. I so look forward to doing these, and I'm really sorry that I wasn't able to do one earlier this week, guys. I just, seriously, if you could have seen me, I was in rough shape, and it sucks too because I never get sick. Like prior to this, probably it's been 3 years since I've had even the sniffles of anything. Like I'm usually in pretty good health, but it is what it is. You know, sometimes it happens, but we bounce back. And the good thing, I said this in the community post, but in sickness and in health, those dividends keep rolling in. And that they did, which brings me to the topic of today's video, guys, because I haven't seen you all freaking months since really the beginning of July. I think even since before the 4th of July, even, I think is the last time I saw you guys. But yeah, we have a lot of catching up to do. And I think now, that I'm trying to get back to doing this stuff, I think the best place to start is with a portfolio update. And I want to share with you a really cool milestone that I hit in my portfolio fairly recently, probably like within the last handful of days or even the last week or so, guys. So we're going to get to that. That's the first thing on today's agenda. Actually, before we get to that, that's going to be the second thing on today's agenda. The first thing, guys, is I want to just give a quick shout out to one of you guys out here in the audience who also hit a really cool milestone in your portfolio. So we're going to just get through that real quick, just a quick congratulations. Then I'm going to go through a portfolio update. I'll talk about the cool milestone that I hit in my dividend portfolio. I'll show you guys just how things have been performing over these last couple weeks because I haven't been able to keep you updated just, for obvious reasons. And then after that, I also want to show you a really cool thing that I just found on Seeking Alpha. Like it's a new feature for Seeking Alpha, really freaking cool. And I want to talk a little bit about that. You guys, if you use Seeking Alpha, if you even have the premium version, you might already know what I'm talking about. So once we go through that, the last thing I'll show you guys in my portfolio is my purchases for the week. Because, that is the one thing that I've been able to do these last couple weeks is continue to buy stocks. I haven't missed, I really haven't skipped a beat there. So I'll show you what I bought for the month, or excuse me, for the week. But anyway, real quick, before we get into all of that stuff, just a quick cheers to you guys. I'm actually sipping a margarita tonight. Last live stream we did, which I guess was last Monday, like a week before this Monday, I was sipping a glass of milk because I had just come back from Mexico, but I'm back in business, sipping a margarita. In fact, I even have my Los Sundays tequila shirt on. I don't know if you guys can see that, a new shirt that I just got for my birthday. But anyway, here's to you guys, quick sip, and cheers to all of you. I hope you guys had a great week. So good. Anyway, for those of you who just joined, I've seen a few new faces here, or a few, the numbers kind of creeping up in the audience. Just to kind of reiterate the schedule, we're going to go through a little portfolio update. Then after that, we'll get into a little Q&A. And before I get into the portfolio update, guys, just let me know. I know a lot of you guys join. I ask this question every week, but for those of you who are new here in the Dividend Happy Hour, let me know in the live stream. Let us know in the live stream, or let us know in the live chat where you guys are all watching from. Maybe a few neighbors out there. We got dividend investors all across the country, but let us know where you're hailing from here in the live chat. We'll do some quick shout outs. And I want to just say what's up to a few of you guys here in the live chat. I see Will's here, Kevin's here, Ryan's here, Captain Suburbia is here as per usual. My man Harris, I see him in the live chat. Will Ritchie, what's going on, my friend? Shaping, what's going on, man? Potatoes and Gravy in the building. We got Gary Lienerman here. Gary never skips a beat. Gary's old reliable, this is what we call him. We've got Gnome here who says, what does that even mean? I know that's like a thing people say, but I have no idea what that means. We've got Johnny Kane here. Welcome back from Johnny Kane. We've got Rex Randall. We've got Unstoppable Sports saying what's up. We've got James here. And we've got Guy here. We've got Jack, my man Jack. We've got Jose. We've got Georgie all the way from Germany. Welcome, my friend. Wow, all the way across the world. That is pretty incredible. We've got Andy from Australia. Really, really all the way across the world. We've got Kellen hailing from Berkeley, really not too far from my neck of the woods, asking if I've ever get up to Nevada City. You better believe it, my friend. Love Nevada City. Great, great little town. Usually pass through there on the way up to Lake Tahoe, which actually might be going up there next week possibly. We got Maximo here in the live chat. We've got a really solid crowd of investors. So hey, thank you guys all for joining. Without further ado, I think we should get into the portfolio update. So, oh, no, actually, guys, I'm sorry. We have one official piece of business to take care of. We have to offer a big congratulations to Zachary, Big Zach, who says, hey, everyone. This is from the Discord group, which if you want to join the Discord, links in the description. But Zach says, hey, everyone, as of June 30th, I have officially been investing for a year. And in that year, I've tripled my passive income since I started. And from December 2021 to December 2022, in the next handful of months, I'm expected to 10x my annual dividend income. I just want to say thank you to everyone I've been talking to for helping me on my journey and keeping me motivated. Now, first of all, Zach, I don't think you're here in the live stream, but I would imagine you'll be watching the replay. I just want to say to you, my friend, big congratulations. That is incredible, incredible, especially, well, a couple things. Number one, that the biggest thing I think is that you have 10x'd or will be 10xing your dividend income just in 1 year's time, just within your first year and a half of investing. That's basically going from $100 in annual dividend income to $1,000 in annual dividend income, which is a huge jump, guys. And it's made possible by two things. Number one, just from choosing good stocks, good reliable dividend paying stocks that you can count on to continue delivering those payments quarter after quarter or month after month. And number two, consistent contributions to your portfolio. That's what it's all about. You buy more stocks every week, you're going to be increasing that dividend income. Then once you get those paychecks, reinvesting those dividends and buying more shares, that's just going to compound. That's what they call it, the snowball effect. And that's how you 10x your dividend income. And I've gone through something similar in my portfolio. I don't know about 10xing, but I look back over a year's time and we're seeing double, sometimes even triple the dividend income. It's pretty incredible what can happen if you just if you just create a plan and stick to it, even in not a long period of time like a year, which I guess sometimes it does seem like this journey takes a while, guys, right? But what are you going to do? You just got to keep buying every single week. And after doing that for a while, things are going to work out. And next thing you know, you'll 10x your dividend income. But anyway, congratulations, Zach. I'm so proud of you, man. And the same goes for all of you out there in the live chat. I'm proud of you guys for taking steps, continuing to take steps forward on this journey to financial freedom, this incredibly frustrating at times, incredibly rewarding journey, and incredibly awesome journey. Especially, it's really cool that we're able to do all this together and we're all after the same thing. So, on that note, I think let's take another cheers to you guys. Okay, not joking around this time. Let's get into the portfolio update, guys. So I'm gonna first show you. Let's go over back to the screen here. I might have a little trouble finagling these two screens here. But anyway, guys, this is what my portfolio was looking last time I did an update, which I believe was at the very beginning of this month. This screenshot is probably from, I would say, like the first few days in July. So at least like 3 or so weeks ago. And as you can see, at this point in time, my portfolio was valued at just under $36,000. I was up about 1.5% in this portfolio in unrealized gain. And my annual dividend income was sitting at just under $1,676 with a 4.67% dividend yield. So that was a few weeks ago. Compared to today, guys, this is what my portfolio is looking like at this point in time time today in real time, we are sitting about, I don't know, what is that, $700 greater in market value at about $36,678 with a total gain of 2.71%. So we've gained a little bit in unrealized gain just in the last few weeks. Not too much, maybe, what is that there? That's, well, let's go back here. Sorry, 1.56 to 2.71. That's about 1.2% gain. But the really incredible thing, I think, is this gain in annual dividend income. So 1675 to 1,714 just in 3 weeks, a gain of $40 just in the last 3 weeks, guys. Oh man, that's a pretty substantial rate of growth. On average, I've talked about this before in previous portfolio update videos, but on average, I think I've noticed my annual dividend income growing by about $1 per day, but I mean, $40 in 3 weeks, 21 days, 25 days at most. Well, no, definitely not 25 days, but 20 days or so. Man, that's a really big jump. So very cool to see the annual dividend income growing so much. And the milestone that I hit, I guess it's not a super incredible milestone, guys, but $1,714, over $1,700 in annual dividend income. I feel like for a long time, especially once AT&T cut their dividend, it seemed like a huge step backward. I was right at about $1,685 or so before AT&T reduced their dividend. That took about $100 out of my annual dividend income. I dropped down to below $1,600 and have had to build that back up, which took a handful of months. What is that, March or April to July? So 3 months or so, a quarter of a year building that back up. That's really not too bad. I think that's a really cool milestone. And if we break that down on a monthly basis, guys, I wrote down the number here. So if we break that down, this $1,715 basically divided by 12, on a monthly average, this comes out to about $143 on average every single month, which is really freaking cool. Really cool. That's another cool milestone, to be over $140, getting really close to $150 every single month in annual dividend income coming in on autopilot, guys. And I was thinking about this before we went live today. I was thinking, what, like in my normal life, what could that pay for? And there's so many different ways you can slice it. You guys know me. I always relay it back to In-N-Out Burger, but all jokes aside, like coming up with something serious, something tangible, something relevant for everyone. This $142 or so, or near $150 for me personally, could pay for my gas for the entire month in my car. I know I probably fill up really once a month, maybe once every 3 weeks. So I could get basically a free tank of gas every single month. And I could also pay probably all of my utility bill, which comes out to, it's depending on the month, depending on what time of year. Summer months, it's usually higher because we're running the AC, but it could basically pay for a tank of gas, my entire gas for the month, as well as my utility bill. And I think that's really cool. Never having to worry about that again. And it's not, I'm not going to retire off this $150 a month, but it's a start, right? It's a pretty big chunk of money, I think, coming in for not really lifting a finger. And when I think about it, I'm just kind of thinking out loud at this point. Furthermore, I've only been on this journey for 2.5 years or so now. Really not a long period of time in the grand scheme of things. And I don't know. I think that's just a lot of progress to be made in that short amount of time. So I don't want to toot my own horn or pat myself on the back, but this just goes back to the same exact thing that I was saying in regards to Zach and his milestone and his portfolio growth. That's just what happens when you have a plan and you stick with it and stay disciplined and stay dedicated to it. Dividend investing, increasing my cash flow in my portfolio and creating passive income in that way. That's my North Star. That's what I'm after. Some people are after capital appreciation. Some people are after other things, building up their Bitcoin, whatever it is. But what gets me going, guys, what really sparks my fires is seeing that cash flow increase. And that's what guides me, and that's what motivates me to continue buying every single week. I don't think I've missed a week ever since I started this journey. I don't think there's been a week where I haven't bought stocks. And now, obviously, as you guys know, what I buy every single week or every single month, it changes from time to time depending on what's happening in the market, depending on what's up and what's down, and what I'm trying to build out, which positions I'm trying to build out. But overall, the method to the madness is the same. You just got to keep buying. Sometimes too, it's not easy. Like there's obviously so many other things I think we could say that we'd rather spend our money on, right? But when you reach these milestones, whether it's $1,700 or whether you 10x your income in a year or hit, whatever other milestone it is, it's these small victories that I think, number one, make it worth it, but number two, remind you why you're doing it, and it keeps the flame alive. So that definitely feels good. And going back to the screen real quick, you guys know on my spreadsheet here, I've got these income goals that I'm trying to reach. These 1 year goal by the end of September this year, hitting $2,000. After 5 years, September 2026, hitting $5,000 in annual dividend income. Truth be told, I made an entire live stream about this particular goal right here. I don't think I'm going to reach this. I don't think I'll reach $2,000 in annual dividend income in the next, couple months or so. It's just not going to happen. We're still quite a ways away, which is okay. Like, we'll get it eventually, just with discipline and continued investments into this portfolio. We'll reach that $2,000. It might take till the end of the year. It might even dip into next year. Who knows? But we'll reach that at some point, and then this $5,000 goal here remains to be seen. But I like keeping these here as motivation. And when it comes to these income goals, guys, it's not a matter of if we can reach it or if we can hit it. It's just a matter of when. Even if you stop contributing to your portfolio altogether and just reinvest your dividends, it's still a matter of when. It's going to take longer or whatever, but it's still going to happen. And so thinking about it from that perspective is a matter of when. It's something that's inevitable. That's also very reassuring. And that's another reason that I really like this style of investing compared to others. I've said this before, but you're not slave to the share price. What you're after, building that cash flow, really doing so you have the control to do it. The more you invest, the quicker you're going to reach those goals. That's just how it is. I know personally I'm investing as much as I can right now, but I look forward to increasing that over time. Excuse me. Actually, that cough, I wanted to bring this up. You guys might, and you might even hear it. I'm still a tiny, tiny, tiny bit congested, and I might be coughing a little bit throughout, so don't be alarmed. I'm okay, but it's just one of the lingering effects from being sick here, but it is what it is. So anyway, guys, that's what's been going on in my portfolio. Now I want to go back over to the screen. I mentioned something about Seeking Alpha. They just came out with a new feature that I just noticed yesterday, and it's very cool. And this new feature, I think this is a premium feature. So if you're paying for Seeking Alpha, I believe you get this, but it's a portfolio health check basically. And so they basically give you a rundown of your portfolio, how healthy it is, as you can see here, just based on the buy or sell ratings of the stocks you're holding, and also they'll tell you like a little dividend safety score, kind of something in line with what you might find on simplysafedividends.com, which is another really great platform, and then also the strength and weakness of your portfolio. So I want to go through this real quick with you guys, just my portfolio according to Seeking Alpha, and real quick before we continue on anymore. I'm taking all of this with a grain of salt. Like, at the end of the day, it doesn't mean too much. It is a cool thing that you can look at, though. Just another way to track your portfolio. And there's something deeper to this that I'll address momentarily. We'll get there. I don't want to get too far ahead of myself, as I tend to do. But anyway, going back to the screen, guys, how healthy my portfolio is overall. Basically, this has to do with whether the stocks you're holding are worth buying or selling or whatnot. Mine's at about a 3.5 out of 5. So it's definitely more in the green than in the red, which is what we want to see, obviously. And Seeking Alpha's very professional diagnosis is that I have 4 stocks that are rated highly, with 18 at neutral, and one's not covered. I wonder what this one that's not covered is. This is where I think they can improve. If I click on this, it just takes me to my portfolio. And it's possible that the one that's not covered is like cash, because this is just US dollars right here, or it could be JEPI. I don't know. Anyway, going back here, guys. So portfolio's looking pretty healthy. 3.5 out of 5 which I wonder what that is out of 100. And then my dividend safety score is what we'll call it here. That's what they call it on Simply Safe Dividends, dividend safety score. But my dividend safety score, according to Seeking Alpha, is 3.21 out of 5. And the great news is, according to Seeking Alpha, I have 10 stocks with a high safety rating, but I have 3 that are relatively risky. And I would wager, well, let's not even guess. Let's go see what these risky ones are. Looks like Lowe's. This is kind of surprising. Lowe's has a pretty low safety score. ORCC has a pretty low safety score. This is no surprise. This is a more speculative dividend stock. This is a business development company, super high yielding company. I mean, as you can see right here, the forward dividend yield is near 10%, which I didn't realize it's gotten that close to double digits. But, anyway, super high yield, which tends to come with more risk. So not surprised to see that D+ there. And then Starbucks, they're giving a pretty low safety score as well. That could have to do with Starbucks' balance sheet, maybe not being the strongest. I'd have to look deeper into this. But, like I said, guys, I really take this with a grain of salt. I don't put too much weight into the ratings that Seeking Alpha gives. It's kind of helpful, like in terms of valuation. You can go to the valuation page on Seeking Alpha. It'll give it like an A- if you're looking at I was doing this earlier today when I was filming. Like you look at AT&T, they give their valuation an A-. You look at, Walgreens Boots Alliance, WBA, they also give it an A-. So I guess it's just a cool reference to have, but, take it with a grain of salt. So anyway, I thought that was a really cool, I think this is a really cool addition for Seeking Alpha. And I like to see them taking more steps towards offering better, how do I explain this? I like to see them offering more in terms of tracking your portfolio. I think that's really cool. That's one thing that I like about the dividendtracker.com, which is another platform that I have. That seems to be becoming more of an all-in-one platform where you can track your portfolio, see the performance across time. It's got the chart for you for your portfolio. You can track your portfolio, track all of your holdings, see the important metrics, the dividend income, whatnot. But you can also use it to do somewhat in-depth stock research, and the dividendtracker.com even has financial statements available, which, by the way, if you want to check out the dividendtracker.com, there's a link in the description of this live stream of this video. You could just click it. It'll take you right there. There's a free version. There's a paid version. Same with Seeking Alpha. There's a free version and a paid version. There's actually a link in the description for $40 off Seeking Alpha Premium if you guys were ever interested in checking it out. That's what I personally use. I've been using it for months now. Seeking Alpha is just hands down my favorite stock research platform. And like I said, I'm very excited to see them kind of starting to take more steps towards offering better portfolio tracking things. I mean, I track my portfolio on Seeking Alpha, as you guys know. Let's go back to the screen. But it's nothing too in depth. Like, these are my holdings right here. It'll show my gain and loss. Excuse me. It'll show my overall gain and loss in my portfolio for each individual holding, but I'd love to see more from Seeking Alpha in terms of portfolio tracking. Like I'd love to see a share price chart. I'd love to see like a payout calendar, kind of like the dividend tracker offers. There's just more things I think Seeking Alpha could add. I don't think that that's their main bread and butter, which is why. Yeah, I don't think that's their main bread and butter, which is why we haven't seen more of that. I think they're obviously more like a stock research platform, and also becoming like a media website. They have some content, some video content. They definitely have their own audio content, different podcasts, stuff like that are actually really nice. And obviously written articles, analyses, news, stuff like that. So all across the board, Seeking Alpha is just a really great platform, but that's like the one missing component, being what I just said, which is like portfolio tracking. But I think this portfolio health check is one step in that direction, and I'm with it. I support it. I would love it if Seeking Alpha became like an all-in-one platform in that regard. Like I would love it. No disrespect to my spreadsheet. I've worked very hard to make my little Google spreadsheet here, and I'm so glad to be able to give it away for free and that you guys actually use it and like it. But man, if Seeking Alpha implemented something similar to this that had all of these same features, showed all the same information, I think that'd be really helpful. And I think that that would be really, really killer. And who knows, maybe in time. As far as I know, Seeking Alpha is still a relatively new company, and they're just got to take it one step at a time. But what they do really well so far. Love it for stock research. Love it for, the news articles, the analyses. I love the podcast. They've got a short daily podcast with like general market updates. Super helpful. I don't listen to it every single day, but depending on the topic and what they're talking about, yeah, it's like 10 minutes long, and it's just a lot of great information and not a lot of time, very condensed. But yeah, I thought that was really cool. And like I said, if you guys want to check out the premium version of Seeking Alpha, you get like $40 off with the link in the description. And, I'm not going to push you too hard on it. I'm not going to be too salesy, but I do get a little commish from that, which is super helpful. I mean, every little thing like that gets me one step closer to doing this full time, which you guys know, it's like, that's the dream, right? We'll get there eventually. But, hopefully I don't get sick for a long time, because like not being able to put out videos for 2 weeks, it doesn't sound like a big deal, but guys, I missed it so much, and it made a big difference. And I was filming some videos earlier today. I felt a little bit rusty, like coming back and, talking to the camera, but we'll get it back. It's not a big deal in the grand scheme of things. So anyway, guys, that's the second thing, Seeking Alpha. I want to go now and just talk about what I purchased for the week. So let's go back over to the screen. You guys can see right here that this week I invested $150 as I usually do. And with that $150, I put half of that into Verizon. I bought shares yesterday, which I totally goofed on that. I should have done it today because, as you guys know, Verizon had a really substantial drop today. And if we go over to check that out, you guys can see just today, well, I guess it actually wasn't that bad. Yeah, I guess it wasn't that. Oh, that's Visa, excuse me. Okay, there we go. That's more like it. So Verizon dropped about 6.75% just today. And then in the last month, guys, they're down 12.2%, which is why I decided to buy it this week, because I knew that they were down, so much for the month. But yeah, today was really rough. And it was just, we won't get too into it, but it was just from their earnings release. And AT&T was a very similar story yesterday, which many of you guys know. I saw a lot of good conversation about that in the Discord. I'm going to be talking about AT&T not on Sunday's video, but on next Wednesday's video. I did, just kind of a spoiler alert, I did list it as one of the best stocks to buy going into the month of August. I do those monthly videos. I probably should have included Verizon on that as well, but I put all this entire video together before Verizon announced their earnings or released their earnings today. So I kind of goofed up on that, but it is what it is. So anyway, guys, moving on. Verizon's the first thing that I bought, $75 into that. I also invested another $75 into Snap-on, which I think I did the same thing last week. I don't remember off the top of my head, but I've been contributing a little bit more to Snap-on, as it is one of my down positions in my portfolio. So going back over here to all my holdings, I'll show you guys. Right now I'm down. Where is Snap-on here? So, I guess I'm just barely up with Snap-on, up 1.06%. But prior to recently, like, that hasn't been the case. I think actually even as early as last week, or as recent as last week, I was down like 4 to 6% with Snap-on. So my position there was definitely down. And, I have a handful of other positions that I can average down on. Definitely Verizon I could average down on, which is why I bought it this week. Altria Group, I think I can average down on a little bit right now. Lowe's I can still definitely average down on. Starbucks I can very much average down on. Both of which, actually, Lowe's and Starbucks have been creeping back up. Lowe's is making its way. I'll be talking about Lowe's briefly, and Starbucks actually, in Sunday's video. Lowe's has been creeping back up, making its way back up to $200 per share. And Starbucks right now is touching the mid 80s. So things are starting to climb back up. And I'm sure you guys have noticed this as well. Maybe, maybe not. Actually, let me pull something up here real quick. Bear with me just one sec, guys. But things in the month of July have been like a lot of green. Like, we're seeing a lot. Gosh, I suck at multitasking. We're seeing a lot of green in the month of July, guys. And I'll put something on the screen here in just a sec. But here we go. Okay, check it out. This is the market so far in the last 30 days, or at least this is the S&P just in the last month. So everything is green for the most part. I mean, we have a few here in the tech sector. IBM is down quite a bit this month, and the insurance industry right over here, we have some red. The oil and gas or the energy sector as a whole is definitely down. But for the most part, across the board, we're seeing a lot of green in the month of July. A lot of stocks climbing in share price. And my portfolio, I mean, as we touched on earlier in this live stream, is really not up too much. Only up about 1.2% just in the last couple of weeks. But, I guess that's actually pretty decent, a 1% gain or so. And I don't know, I'll take it. I don't really care either way, to be honest with you, because like I said, that's not what lights my fire. I'm going for that cash flow. And, you guys are probably sick of hearing us, dividend investing creators talking about this, but it's like, it's good. It's good if these stocks go down. Like I know if Zaldath were here, which he told me he'd be here. I know if he were here, he'd make some sort of comment about how he hates the green and he wants to see blood in the streets on the market. And it's like, yeah, that's helpful for us because we can buy shares of all these great companies like Verizon or AT&T. Well, I mean, some of you guys might disagree on both of those, more specifically AT&T, but man, it just makes it so much easier to buy that cash flow from these high quality companies. And I don't know, but having said that, and I'm just kind of rambling at this point, guys. We'll get to the Q&A in just a sec, but just, this month has been green, but I really don't think we've seen the last of the red. I think we are still due for some more compression just across the entire market. We'll see if it comes. We'll see when it comes. I think I've heard some whisperings, especially in the Discord, about people talking about the Fed meeting and maybe even announcing an official recession, which I don't know. Let me know in the live chat. Are we officially there yet? I actually don't know for certain. I haven't been paying that close of attention to it, but still, so far for the year, things are down quite a bit. Sorry, guys, my phone's going off. Anyway, that's pretty much all I got for you guys. Before we move on to the Q&A, I do have one question for you guys that I'd like to know in the live chat. Let me know what you guys bought this week. I see some of you guys already mentioning it there, talking about some Starbucks, talking about some Verizon, but let me know in the live chat which stocks you guys bought this week. I'd be curious to see if we picked up anything of the same, if you guys picked up some Verizon or some Snap-on, or in general, I'd be curious to hear what you guys are looking at and what looks good to you guys. So let me know in the live chat there. I'm going to take a quick sip of my marg. And I think this is a great spot to open it up for some Q&A, little hangout session. I prefer to call it a hangout session because that's all we're doing. Really just BSing now at this point, right? Anyway, I'm going to start putting some comments on the screen here, guys, starting with my man Shamir, who asked if I bought some more AT&T this week. Nah. I mean, you heard me talk about that a few moments ago. Just bought Verizon, bought Snap-on. But I'm actually glad you asked that. On the topic of AT&T, and I'll actually talk more about this in Wednesday's video when I talk more on AT&T. Man, I would totally buy some more AT&T. I think it's at a great value right now. It's looking very affordable, and it's one of the positions in my portfolio that I can very much average down on. But it's one of my bigger holdings right now. AT&T is in my top 5, and just for the sake of diversification and also having other things I'd rather contribute to, I'm just putting money elsewhere. I have so much AT&T, and I as far as their earnings go, I actually am pretty pleased with them. It seemed like the overwhelming reason that they dropped so much was because of the free cash flow, the lower guidance for free cash flow. It seemed like that really overshadowed a lot of the positive news that came out. And the free cash flow thing is a pretty big deal, especially for a company like AT&T where investors are so reliant on the dividend. Like that's why we buy that company, right? It's for the cash flow. It's not going to like grow super substantially. It's a pretty stagnant stock as far as share price goes. So we're really buying it for that income. And furthermore, this company still, the spinoff definitely helped. This company still has to pay down a lot of debt, and they can do that with the free cash flow. So like every dollar in free cash flow that AT&T can get is definitely helpful. And so I guess that's why they drop so much. And anyway, without going on too much of a tangent, guys, I would definitely buy some more AT&T if I didn't already have such a big position in it. And at some point, I will be contributing more to AT&T in my portfolio, just not right now. I'm focusing on other things. So hopefully that makes sense and you guys can understand that. As far as purchases, it looks like Jose bought some more AT&T and some Verizon. Cool. Good for you, man. That's awesome. And it looks like Guy here says he was influenced by Russ, Dapper Dividends, buying 1 share a week of Verizon until he hits 100 shares. That's great. So Russ, excuse me, guys. Russ did the same thing with Pepsi. He bought a share of Pepsi every single week till he hit 100 shares. Okay. Brijesh says, I hope you're investing in a Roth IRA. Yes, Dad, I am investing in a Roth IRA. I have one on M1 Finance that I started earlier this year, but yeah, I contribute to that every single week. I don't really show that because it's 5 different ETFs, $50 spread, across those ETFs every single week. And there's not a lot going on in there. It's down a lot. I started buying it like when the market was way up. And so I'm down in every position in that portfolio right now, which is totally fine. Anyway, so moving on, my friend Fawad, I butchered that. I'm sorry, man. But he asks, what's the next dividend milestone? I would say the next milestone, honestly, is probably $2,000 in annual dividend income. And realistically, at the rate my income's growing, I'll probably be there well, I don't think I'll be there by the end of the year, but I could be there probably by like February of next year, maybe even March of next year. We'll see what happens. But yeah, that's kind of the next income milestone, I would say. Let's see here. Yeah, so Kevin, I agree, man. It's interesting that Seeking Alpha gave Lowe's such a low dividend safety score, especially when you compare that to Simply Safe, 93 out of 99. So that's why I don't take it with, I don't put too much weight into those, into those grades. I don't even know if that's like a human thing that they put in or if that's just some sort of like algorithm that they use to determine that and that it automatically fills that and changes it over time. I don't know, but I don't know. But it is interesting that there's that discrepancy. But, you will notice that across platforms. One other really big discrepancy I've noticed is with the dividend tracker. And I'm going to be making a video kind of going through that platform. It's a really great platform, don't get me wrong. But there's a really big discrepancy for me in what it shows on my portfolio. Like the portfolio value on the dividend tracker is totally different than what and it automatically like pulls the data from Charles Schwab, the brokerage that I use. Huge discrepancy there. It shows my portfolio value a lot less than what it actually is. And the same is true with the annual dividend income. It shows the trailing 12 months of annual dividend income, but it's like $150, $160 less than what my income actually is. So that's not great, but that's just, I guess that's why it's good to have a couple different platforms to refer to just to see how they line up, right? Jim here actually on the topic of the dividend tracker, and we had a conversation about this too. Jim had both tip ranks and the dividend tracker. The dividend tracker is hands down better and more of a value. Yeah, it really is a pretty decent value, and it's getting better over time. Like I said, it's becoming an all-in-one type platform where you can track your portfolio, you can do stock research, and it's all laid out pretty, I don't want to say basic, but it's all laid out very simply, so it's very easy to understand. And they have some really great tools too. Like they just put in a future value calculator, which is part of the paid version on Dividend Tracker, and it is something that you can find for free elsewhere. So I think that could be better, just keeping it real. But overall, I think it's a really great platform, and it's definitely improved a lot in a short amount of time. One of the biggest differences too that I've noticed is when I first started using the dividend tracker, there was a pretty big lag. Like it was really slow to load the information. It still is a tiny bit, but it's a lot faster, and it's getting better as time goes on. So I think that's really great. And it's a new, I don't even think it's a year old yet. And maybe it's a year old at most, but it's a really new platform, and it's made some great strides in a short amount of time. So Kevin asks, will Seeking Alpha consolidate several portfolios into an overall portfolio? It will. And actually, Kevin, I'll show you that real quick. So going back over here to the screen, let's get out of this. So right now, this is just my Charles Schwab portfolio. But if I bring up this drop-down menu, I can go to all portfolios and it will kind of do that. So I thought there was a way for it to show all the holdings. Maybe not. I think what I'd have to do is like this, right? But I thought there was a way, like if I just wanted to see all the holdings in, oh, here, let's try this. Expand all? No, that's the same thing. This is the closest it'll get, I guess. But that's a great question, and that is something like if they do take more steps towards like portfolio management and portfolio tracking, I think that would be a great implementation for sure, especially for someone like yourself, because I know you've got two different portfolios. It'd be nice in some cases it's nice to see them separate, but in some cases as well, it'd be nice to see them together, especially if we're talking like overall portfolio performance and overall like dividend income and stuff like that. Okay, this is a really good question from Harris. He asks, if there was a 15 to 20% crash in the next month, what would be the position you would try to dollar cost average and add more of? Let me think about that for a sec. Oops, sorry guys, I hit the screen. Part of me wants to say Starbucks, but I'm kind of like with Starbucks right now that I'm in the same boat with Starbucks that I am with AT&T. Starbucks actually is technically my biggest holding now, and I'm a little bit hesitant to add more, even though I'm down so much. And I'd actually be curious to hear your guys' thoughts on this. I'm down a lot, so I can still average down on this stock, and I'm obviously I plan to hold it for a long time. I'm in it for the long haul with Starbucks, and but it's like my biggest position right now. So I'm a little bit afraid to continue buying in, get too overweight in that position, especially when there's others that I can also average down on. But at the same time, it's like one of my favorite companies, super high growth dividend stock, which is right in line with my investing goals right now. Buying more growth. It has a 15% 5-year dividend CAGR, right up my alley. So it checks a lot of boxes, but it's just a big position for me right now. So I'm a little bit hesitant to add more of that. To answer your question, Harris, like without just rambling anymore, probably Procter and Gamble. Definitely Procter and Gamble. If we're just talking positions that are currently in my portfolio, Procter and Gamble would be the first one that I would add more of. I'd add more of that. I would add more Coca-Cola. And what else? What else is up like a lot in my portfolio? I don't know. Maybe, definitely those two though. I would definitely want to work on my consumer staples positions. And I've talked about this in previous videos, but if I was to add any new positions too, I'd be looking at Apple and I would be looking at Target. Those are like the two that I'm ready to pull the trigger on, but unfortunately, like the share price is heading in the opposite direction that I want it to. But in this hypothetical situation, if they drop 15 to 20%, I probably would add both of those new positions to my portfolio because I think the price would be right at that point. Rick here says, "Hey Ryan, glad to have you back." Thanks, Rick. I appreciate that, my friend. It's so good to be back. I can't say it enough. I'm so stoked to be making videos again. I miss this. Let's see. Jim here says, Starbucks has been closing stores, not so much for financial reasons, but for employee safety. Yeah, I read that they were closing stores in cities like the Bay Area, San Francisco, Los Angeles, Seattle. It's just, I don't know how many stores it is exactly. I didn't read the exact number, but I'm sure it's not so much that it's going to, it's going to completely wreck them. And you know what? Just a little, I won't go on too much of a tangent, I promise, but this is relevant. So here in Sacramento, in downtown Sacramento, we have what is called a Starbucks Reserve, which is kind of like an expanded version of Starbucks. It's a nicer Starbucks. I don't know the exact difference. I don't know the exact difference, but it's like a more upscale Starbucks. We have one in downtown Sacramento. It's supposed to be a really nice place. Unfortunately, it's not really been that way just because of the location it's in. You go in there at any given time, and I want to say this delicately, but you go in there at any given time, and there's just unfortunately, there's a lot of homeless people just kind of chilling, hanging out in there, and that's no disrespect to them, obviously, but for a Starbucks that's nice like that, I do think it has a negative impact on that store. And the same is true kind of to what Jim was saying with some of these locations in these bigger cities. Yeah, it's apparently it's become a big enough issue for them that they've gone so far as closing stores. I mean, obviously they'll open them back up at some point. I don't know when, but yeah. Anyway, good comment, Jim. And Captain Suburbia says Zhao slacks on coming to the live stream on time. Yeah, he's working though. That's what it is. He's working. He's been working a ton. I actually need to respond to him on Instagram, but we've been DMing and he's just working a ton. That's all it is. It's Friday nights are not easy for a lot of people to get to these streams. It seemed like Mondays for a lot of people worked better. I mean, on average, you guys can see right now there's about 80 people in the live stream. Mondays we're getting triple digits, no problem, like 120 people. So I don't know. Seems like there's a lot more people available on Mondays, and that's something that I'm kind of taking into consideration. Maybe, possibly even switching back to Mondays at some point. But for me personally, like Fridays just work a lot better for my schedule. It's just so much easier to do this on Friday. And Captain Suburbia says, "Don't forget to hit the like button. It misses your caress." Yeah, guys, if you wouldn't mind doing me a favor, if you haven't done so already, please hit the thumbs up on this video, on this live stream. It would be awesome. Definitely helps, spread this video far and wide. And we're trying to build this community as big as we can and touch people with the magic of dividend investing. So definitely hit the thumbs up. If you're not already subscribed, hit the subscribe button as well. Would really appreciate that. Thank you so much. Let's see here. Let's see here, guys. Let's find another comment. Oh, this is nice. This made my day. Unstoppable Sports says, "You are the best investment YouTuber, by the way." Man, thank you so much. I doubt that. I mean, I hope I'm entertaining. I'm guessing so, since you guys tune in every week, which I really appreciate. But there are so many other people out there who know a lot more about this stuff than I do. Not that that's everything, but that's certainly an important component to this. But I will tell you, I am trying hard to learn and become a better, more knowledgeable investor so I can pass that on to you guys. And if nothing else, I'll tell you what, I have so much fun doing this. And I really get a lot of value just even talking about what I'm doing and the stocks I'm buying. It helps me understand it all better. And I hope that it makes a difference for you guys as well. Because, whether you like it or not, you're stuck with me, guys. I'm not stopping. I'm not going to not make videos. So, better learn to love it, I guess. But no, anyway, thank you, man. I really appreciate that comment. That's super nice. Let's see. I see a lot of you guys talking about your purchases here in the live chat. I see some AT&T, some Dollar General, some Store, Realty Income, Texas Instruments, some more Verizon, Enbridge, Jeppy. Man, you guys buying a lot of different things, it looks like. Religion on the talk of AT&T. AT&T has way too much debt. Verizon is a much better buy. Yeah, I mean, no argument there. The spinoff of Warner Brothers Discovery was definitely a step in the right direction for AT&T. And I'll talk about this more next Wednesday, but from Q2 to Q3, they reduced their debt by, I think, $37 billion, which I'm guessing in large part is due to just the spinoff. This is their first earnings report since they spun off Warner Brothers into Warner Brothers Discovery. So definitely a step in the right direction. And that's step in the right direction, but they still have a ways to go, which is why that lower free cash flow guidance definitely hurts. And one of the other components to this, I'll address this right now because I didn't talk about it in the video that I filmed earlier that will be going out Wednesday. One of the things that they mentioned too from this earnings report, which you guys might have caught, is on average, customers are paying their bills 2 days later than usual, which could or could not be a big deal. In fact, Kevin, I think you said this best in the Discord yesterday when you guys were talking about it. And correct me if I'm wrong, but Kevin Burgess said something along the lines of, he used this analogy like, let's say that you work a job 7 days per week, right? Kevin, I'm totally ripping your analogy, man. But it really put it into perspective and it was really helpful. Let's say that you work 7 days a week at your job and you get paid after every single day. But let's say all of a sudden your boss comes to you one day and lets you know, I can't pay you for 2 more days. I'm going to have to be 2 days behind on paying you, which basically means like, basically means that you've worked 2 days. Basically, how do I explain this now from here? You possibly will have worked 2 days without payment if your boss doesn't make up that payment and pay you back. The same is kind of going on with AT&T. And the CEO, John Stankey, he didn't make it seem like it was that big of a deal. Like the customers who are doing this are kind of on the lower end of the income spectrum, and maybe this could be indicative of something going on in the economy as a whole, just financial struggle. And maybe this is customers just trying to prioritize the bills they can pay with possibly the limited funds they have. But anyway, guys, customers are paying their bills 2 days later on average. And this isn't every single customer. This is just a certain percentage of them. But it does create the potential that the customers won't end up paying their bills, which happens in some capacity anyway. But if that happens to a larger degree than normal, that wouldn't be good for AT&T, who, like I said earlier, needs all the free cash flow they can get right now to continue paying down that debt. Because, religion, LOL, like you said, they have a lot of debt. That's one of the biggest holdups for a lot of people considering investing in this company is AT&T's debt load. But this is natural for a lot of communications companies, even Verizon. Just naturally, they have a lot of debt on the balance sheet. It just comes with the territory. And as investors into companies like this is something we need to be mindful of. And that's kind of just going back to what I was saying earlier about not buying any more AT&T right now. That is one of the things I think keeping me from adding more to this position is just wanting to see how things progress post spinoff. I think that this earnings report that came out was pretty solid. They beat on revenue, they beat on earnings. There was a lot to like, but I just want to see moving forward, maybe even over the course of these next few quarters, maybe even the next year, what the debt load or the debt level continues to do and how they maneuver that with the dividend as well, because less free cash flow puts the dividend at risk as well, which is obviously something we don't want. And I think I'm saying a lot of things that you guys already know, so maybe we'll just move on, huh? Excuse me. Okay, this is a good question, actually. Wicked Crypto wants to know, favorite industrial stocks? Do you like CAT and Parker Hannifin, ticker symbol PH? Yeah. Excuse me. I believe I actually have Parker Hannifin on my due diligence list to do some more research. But that looks like a really solid company as far as defense companies goes. I really like that one. I have Lockheed Martin already in my portfolio, so I don't know how eager I'll be to add Parker Hannifin, but it still appears to be a really strong, really solid company. And you can't go wrong with Caterpillar either. Caterpillar's the world's leading, construction equipment manufacturer and mining equipment. So definitely a really, really great company. I don't think you can go wrong with both of those. My two favorites, well, I would say my favorite industrials company is going to be Snap-on. I just think Snap-on is such a beast, such a great company. There's so much to love about that company. And, that's why I picked up some more this week and have been kind of throwing some more money into that because I really like that stock and I would not mind making it one of the biggest positions in my portfolio. I also really like Waste Management. Such a boring company, but it's like I don't know, like it seems like such a safe company for a long, long time. It seems like such a good one to have. The issue with Waste Management though is it always seems to trade at a premium. So it's kind of a hard one to establish a good entry price, I think. But anyway, I think there's a lot of great industrial stocks out there. It's actually, I would say it's becoming one of my more favorite sectors. I seem to find a lot of companies that I like in that sector. Yeah. Good question. So next question from Josh here who says, have you ever thought of trying fast graphs? I have. In fact, Jim here in the live stream, offered to let me use, Jim, I won't put you on blast. I have a really good friend who offered to let me use his fast graphs account, I believe. And I haven't taken advantage of it yet. And I think I will at some point. It seems like a really Seems like a really solid platform. At the same time, though, truth be told, Josh, I love Seeking Alpha. Seeking Alpha gives me everything I need. I really know that platform well inside and out. And I don't know that I would need to use fast graphs. Yeah, I just don't know that I have a need to use it at this point. Maybe at some point I'll try it. I'd also like to try Qualtrim, which is, Joseph Carlson's platform. I know he's giving a free trial, and I'd like to try it and make a video on it and let you guys know my thoughts. But yeah, I thought about trying fast graphs. I thought about trying Simply Safe dividends as well. I'd sooner try Simply Safe than I would fast graphs. I'll tell you that. Let's keep going here. Let me take a sip as I'm finding another comment. So Jim here says, Dividend Tracker is very responsive to suggestions on how to improve their platform. Absolutely. Absolutely. And that's one thing I really respect about them too. Is that they do a great job of listening to feedback and trying to implement it. So they're definitely giving the people what they want. But it takes time, to build out a platform like that. Is I would imagine it takes a lot of time and baby steps. But yeah, they're doing a great job. Okay, guys. Let's see. Potatoes and gravy. How many investment accounts do y'all have, including retirement accounts? I just have 2. I have my taxable brokerage account on Charles Schwab, which you guys know, and then I have my Roth IRA on M1 Finance. That's it. Keeping it simple. Logan, this is a good question, man. Thoughts on Citigroup? I have really mixed thoughts on Citigroup. I think it's a very cheap company, and as far as diversified banks go, international banks, man, it's like one of the better values out there. Probably one of the best. But Citigroup, fundamentally, and correct me if I'm wrong, but it seems to be going through kind of an interesting transition, one that I don't fully understand, and I'm staying away from it. In fact, banks in general, I don't quite understand how to value banks, and I don't quite get how to look at them yet. I do have Bank of America sitting on my due diligence list, and I'm a Bank of America customer, so I'd say that's the one I'm most familiar with, and that's because of that, that's the one I'd be most likely to invest in. But I have a lot of learning to do as far as banks go. Investing in general, I have so much to learn still. So much to learn, guys. Let's see. Let's see, guys. Sorry, guys. Give me one sec to find another comment. This is a really good one too. Joey says, I appreciate your outlook on the market and dividend investing and the all in this together attitude. Well, it's Joey. I mean, it's true, man. The all in this together thing, it's important to me because it is true. Like, we all are in this together. I think that's a really unique thing about dividend investing is, well, really investing in stocks in general is that, we don't have to step on each other's toes to get ahead. It's not like with real estate investing where we could be like, going after the same deal. Like with dividend investing, it's like if we buy the same company, cool. Like there's plenty of shares to go around. It's not like it's just one physical property that only one person can have. And because of the nature of dividend investing or investing in stocks in general, I think it inherently becomes a really collaborative hobby. And I'm really stoked to see this community growing and seeing more people take interest in this, especially because I've just noticed how rewarding it's been for me these last couple of years. And man, even just being able to make an extra $150 from doing this every single month is huge. Like, that's so cool to me. And so, I'm really hyped on, I'm really excited to be able to talk about this. And furthermore, I'm really excited that everyone's able to, that there's people that are actually willing to listen. So, man, thank you for the comment. Any sort of positive feedback from you guys. I don't deserve you guys. Is that a Gone with the Wind poster? Yeah, it's a Gone with the Wind poster over there, man. I have in our garage here, I've got other posters. Like I have a Ramones poster, love the Ramones, big punk rock guy. I have an Entourage poster, love Entourage. things that I'm interested in, but those are more fitting for like a man cave or something. And we're actually going to be moving in a couple months, and um, when that happens, I'm actually will have a legit room. Like, I don't want to call it a studio, but basically like an office where I can, I'll have my work set up and I'll have all my camera gear just set up so I can turn it on and just hit record whenever, instead of setting up my gear here in the living room or in the dining room, excuse me, whenever I want to film. So I think I'll have some more of my posters back up then. I'm excited for that. Yeah. And have some more stuff up there too. But yeah, no, yeah, that's a Gone with the Wind poster. Thank you for asking. Comic Book Athlete here says, this is a good question. What are your favorite rules of thumb for investing? Mine are buy what you know, do your due diligence, buy in a sell-off when everyone's scared out of their minds. I'm keeping it clean. You guys know me. Those are really good rules of thumbs. Rules of thumb, I mean. I would share the same one. I think especially for, well, I guess for everyone, but especially for beginner investors, the buy what you know thing is really important. Like, whenever I talk about like the best portfolio or the best things you should buy as like someone who's just starting out with investing, that is one thing I say is like, think about the companies that you are consumers of or a consumer of in your everyday life. Like, I'm a big Target customer. I go to Starbucks. Stuff like that. Think about those things for you. I think for a lot of beginner investors, that's a pretty good place to start, especially for those who don't quite yet understand valuation or know about valuation or know a lot of the intricacies that come along with this. It's fine. Like, everyone's got to start somewhere. And I think by approaching it from that perspective, like buying things that you are a consumer of, I think that will keep you engaged as a beginner investor and give you a good starting point to build off from there. I think that goes in line with your rule of thumb, and even your second one about due diligence. Yeah, man, for sure. Like, definitely do your research if you know how to do it. And if you don't know how to do it, make an attempt, make an effort to learn how to do your due diligence. I think that's important if someone's going to be investing for a long period of time. Yeah. Let's see here. Religion says, Ryan, check out Everything Money. They preach good fundamentals. Yeah, I watch Everything Money quite often, actually. I like Everything Money for the most part. I gotta say though, we talked about this in the last live stream, I think, or a couple live streams ago. I really didn't like the beef that they had with Jeremy. It kind of rubs me the wrong way when they call out, basically negatively call out other creators, which in some cases it's justified. Like, I'm not saying that they're wrong, but I also don't know that it's 100%. Like, I don't know. I think you could put your energy into more. I just think there's better things you could be talking about. Like, people come to watch your channel to, like you said, religion, to learn about good fundamentals of value investing and learn about good companies and learn their thoughts on it. They don't want to hear you talk smack about other creators. Like, I think that's a pretty poor way to try and get ahead, personally. And, I mean, I don't think you guys will ever see that sort of thing from me. And I'm speaking specifically, and I think I said this, I'm speaking specifically about the recent beef with Jeremy. They've called out other finance people as well, but the most recent one being with Jeremy. I am glad to see them bury the hatchet. I did appreciate that. And yeah, I did like that. There are some things that do kind of bug me out about Everything Money sometimes, but I do enjoy watching them for the most part, and I like hearing their take on a lot of the companies. So Alex here says, were you late today? No, I think you're asking me. No, I wasn't late. I was right on time, my friend. Right on time. And look who it is, guys. We got Zal here. I'm like 15 minutes behind in the live chat, but Zal, welcome, man. Word on the street is I got called out for not being here. No, I don't think so. Not by me, at least. I mean, we just love you, man. We love having you here. Let's see. Oh, okay. This is from AT&T earlier. Basically, you will forever be 2 days behind until the employer reverts. This is talking about Kevin's analogy that I pretty much butchered earlier. Ultimately, not a huge deal, but in a payment cycle, it does indicate weakness in cash flow. Yeah. Yeah, well said, man. Thank you for bringing that up. Okay, guys. Paul Pelosi was my tipping point for buying Intel. I saw something, we won't get too into this, but I saw a brief clip um, of someone like blatantly asking, and I don't know if I'll get this 100% right, but someone blatantly asked Nancy about like her trades, and she gave kind of a non-answer from what I saw, and then just kind of like left the stage pretty abruptly. Um, I thought that was kind of funny. It's funny. Gosh, guys, it's funny. It's funny to see like that particular thing. It's funny to see that becoming a mainstream realization. Um, I mean, not that anything's really going to happen from it, or probably, but it is funny to see more people talking about stuff like that. Let's see. Let's keep going here. Couple more comments, guys, and we're going to call it a night. Um, okay. I think this is an interesting question. Joey says, is there a cutoff date for the dividend strategy? For example, when you hit the $40,000 mark for taxes, expenses covered. What do you mean exactly? I think I don't know that I quite understand the question. It seems like a good question. I think there's something here and I want to understand it, but I don't quite get it. Joey, if you wouldn't mind clarifying this for me, or maybe one of you other guys in the live chat who do get it, please let me know. I would like to answer this because this seems like an interesting question. Dimitri, real quick, man, what's the milestone? Just hopped on. Okay. And it's not like a super crazy, well, gosh, I shouldn't say that because the title's indicating otherwise. So the milestone that I hit, the big income milestone, is I officially hit $1,700 in annual dividend income, which also now officially puts me, Dimitri, at an average of about 142, almost $143 every single month. Cool milestone, at least for me. I think I'm stoked about it. Okay, Wicked Crypto, really good question. Any new positions you're looking at getting into? And do you like healthcare stocks or insurance stocks? Yeah, man. Great question. So there's two stocks that I'm really holding out for that are on like I'm for sure want to add them to my portfolio, and they're just big blue chip ones. Like I've talked about them before. I talked about it a little bit earlier in this video too. Target and Apple are the two that I'm ready to pull the trigger on them. I'm just looking for the right price, and they're kind of heading in the opposite direction of where I'd like them to go. So I don't know how soon I will realistically add them, but yeah, those are the two that I'm looking at. And then I have probably 6 to 8 other stocks that I need to do some more research into before making a decision. Those could make their way onto the buy list. I could just be not interested in them, but either way, I need to do some more research into them. And to answer your second question, do I like healthcare stocks or insurance stocks? Yeah, I have a couple healthcare companies. I have Johnson & Johnson and AbbVie, and then, oh gosh, let's go over to my watch list. This is actually, I don't know why I don't just do that. Make things way easier on everyone. Okay, so let's go over to my due diligence list right here. There's another healthcare stock that I've been looking at, Abbott Laboratories. So I want to do some more research into this one, but this is sitting on my watch list as a healthcare addition. And then as far as insurance companies go, I was for a period of time considering Allstate. I'm not at the moment. Maybe I should revisit it. Really good company. But yeah, I would say that'd be the only insurance stock that I've really considered. But having said that, as far as companies in the financial sectors go, I would sooner add a bank stock than I would an insurance company. Like I'd sooner add Bank of America than I would Allstate or Aflac or anything like that. So hopefully that makes sense. Let's see. Let me take a sip, guys. Oh, good question from Logan. My man, Logan. So how much do you allocate to real estate investment trusts? Right now, not too much, Logan, because it's my Realty Income, before Starbucks became my biggest position, Realty Income was my biggest position. I bought a lot of real estate investment trusts early on in my dividend investing career. I have 2 right now. I have Realty Income and I have WP Carey. But I also have two, you might have seen this a moment ago on the screen. I also have two other ones in my watch list that I'm kind of considering adding to the portfolio. SPG, Simon Property Group, and Vici Properties, ticker symbol VICI. Those are sitting on my watch list. I wouldn't mind adding both of those. I just, and SPG actually looks to be at a really good value right now. And I should seriously like dedicate some time to like looking more into that. Okay, I just saw a comment that was kind of funny. I'll get to that in a sec. Oh gosh, but yeah, so that's kind of my REIT situation. I really like real estate investment trusts, and at some point I'd like to add some more. But yeah, right now I just don't feel like is the right time for me. But if I was to add another one to my portfolio, I'd probably would add SPG, and I probably would add SPG sooner than Vici. So that's kind of where I'm at, Logan. Good question, man. So what I was laughing at a second ago, guys, Jim asked, do I still have the Farrah Fawcett poster? I don't know if you're, I think you're joking, Jim. I think you're just being a funny guy. I never had a Farrah Fawcett poster. But yeah, I think that's just the joke. Oh yeah, I think this is in reference to like my Entourage and Ramones thing that I was saying earlier, like 10 minutes ago or whatever. Nope, no Farrah Fawcett, man. So on that note, I want to ask you guys, have you guys watched Stranger Things? That might seem like a random question. Have you guys watched Stranger Things? There's a pretty hilarious Farrah Fawcett line in the show Stranger Things. And I will say, like, being sick, guys, I didn't do a lick of anything. The only good thing to have come out of me being sick is I started watching Stranger Things, and I can't tell you, I'm really not a big TV guy. Like I really don't watch a lot of TV, but I can't tell you the last time I've binged a show as hard as I have Stranger Things. That show is just like hooked me in. And Steve Harrington, one of the characters in the show, is just like one of the funniest freaking dudes. Has a classic Farrah Fawcett line. Oh my gosh. Okay. Anyway, if you know, you know. I think that's kind of the bottom line with that. Anyway, let's continue on. Couple more comments. I know I said that a couple comments ago, but anyway. Oh, real quick, guys, say hi to Peanut. I don't know if you can see him. Oh, I'm in the way. You can see his head there. Oh, there he is. Yeah, he's hanging out. Sorry, you guys probably didn't need that. Okay, Jorge, good question, man. Quick advice, where to invest. I can invest around $200 a month at this time. I start really late, but better than never. Very true. Better late than never, my friend. So I don't know exactly what you mean by where to invest. Are you asking which stocks to invest in or which brokerage to use? Now, I'll kind of answer both questions just because I'm not sure. So really quickly, as far as brokerages go, which in case you don't know what that is, Jorge, a brokerage is basically a platform that you use to buy and sell stocks, and you hold your portfolio. Your portfolio is held on a brokerage. There's some really great ones out there. I personally use Charles Schwab, one of the legacy brokers. They've been around for a long time. Fidelity Investments is another one of those. Excuse me. Some of the newer guys on the block, going to be ones like Robinhood. I'm sure you've heard of Robinhood. M1 Finance. I've had a really great experience with M1 Finance. Webull is another popular one. There's a handful of other brokerages out there as well that have kind of been popping up, but I've been really happy with Charles Schwab. I also was really happy with Robinhood, and I am really happy with M1 Finance. So anyway, that's I guess the answer to the first part of that question. Now, as far as what to invest in as a beginner, personally, I don't want to make any strict recommendations, but if it was me personally, if I had to go back to square one and start from the very beginning, man, I would just seriously, I'd buy like SCHD. Probably like that's it. And then maybe choose a handful of, like a small handful, a couple of individual stocks outside of that. That's personally how I would do it. Let's see. Or like if not SCHD, which is a specific Charles Schwab ETF, you can do VTI, which is a total market ETF. You could do VOO, the Vanguard, S&P 500 ETF. That's ones like that are pretty good. Oh, Captain Suburbia. I may or may not have paged Zal in the Discord saying you missed him. Well, thanks, man. Thanks for sending out the bat signal. Um, let's see. Jeep Kid, this is a good comment. So I'm trying to get my girlfriend into investing. I have to start slow and simple. Any recommendations for ETFs that will help her see why she should be investing? Not ETFs particularly, but if I was you, I would think about the things she's interested in. Where does she shop? Where does she go? Does she like Dutch Bros? Does she like Starbucks? Does she shop at Target? Does she eat a lot of McFlurries? Does she like McDonald's? Think about these things. Like, what is she interested in? Where does she go? Where does she spend her money? And maybe look for companies that are in line with that, or maybe suggest to her investing in those companies. As someone who's just starting out, just trying to get into it, you want to get them interested in it. I don't think you can talk about things like valuation and PE ratios. Not quite yet. Not quite yet. I think you need to start more on the surface and just think about the companies that are going to keep them engaged and make them want to invest into them. Like, it's cool to think about, personally, I think it's cool to think about Starbucks. Like, I'm an owner of this company. Technically, I'm an owner of this company that I love a lot, that brings me a lot of joy, that I spend my hard-earned dollars at. And it's cool because I spend my hard-earned dollars there. That's directly benefiting me as an investor. I get a small portion of that back, and that's going to grow over time. And I like supporting the companies that I like, if that makes sense. So, Jeep Kid, that's a really great question. That's how I would approach it. And I'll brag about my girlfriend for just a second, if you guys don't mind. I'm very proud of her because she, I guess maybe a year or so ago now, a year and a half or so ago, November 2020, I think, she made a portfolio on Robinhood, and she buys every single week. And that's kind of what she does. She's got Coca-Cola. She loves her Coke Zero. She buys Coca-Cola. She buys Starbucks. She has VTI, is kind of to create that diversification. But anyway, she got the VTI as kind of the base, but then around that, there's just stocks that she's interested in. And it's worked so far, But yeah, I think that's a great place to start personally. Let's see here, guys. Okay, so Joey, circling back to your question, taxable income on dividends hits at 40,000. Expenses covered just meant stopping dividend investing once the dividends. Oh, okay. I think I understand the question. So, okay. I think what you're asking is, once you hit $40,000 or some sort of number where your expenses are covered, do you stop contributing to your portfolio? That's a good question. Basically, I think you're asking, like, at the point that you're ready to live off of your dividend income, do you stop contributing? I think it probably differs for everyone. And I thought about this, well, I haven't thought about this too much for myself, actually. I won't BS you. I haven't thought about this too much for myself, but thinking about it now, like, when I get to the point where my dividends cover all of my expenses, I probably would stop contributing. But at the same time, I personally wouldn't decide to live off of my dividend income until I knew that it could cover my expenses and then some. The and then some for me is going to be important, because I still want to have some cushion in there just in case, number one, but number two, I still want to have some extra money in there, some extra cushion to continue reinvesting into the portfolio. And like, I don't ever want to be in a position where I don't ever want to be in a position where I'm taking 100% of my dividend income, because I still, just me personally, I still would want to keep that reinvesting into perpetuity. And I know that the dividends grow, just the companies that I have, the income will grow as time goes on. But still, I want to leave some cushion in there. I just think that's financially a smart move, because you never know what's going to happen. But at the same time, I'd want to keep some in there to reinvest and continue help growing the portfolio and growing the dividend income on top of the dividend increases that will come. Hopefully that answers your question, Joey. Hopefully it does. Let me know if it doesn't. Okay, one more one more question, really. Okay, yeah, you guys are talking about Stranger Things in the in the um, in the live chat. So the Farrah Fawcett line that I'm referring to is when him and Dustin, they're walking on the, this is season 2, I believe. They're walking on the train tracks, and Steve's telling him about his hair, and it's like, when it's damp, 2 pumps of the Farrah Fawcett spray. That just had me rolling. Probably, honestly, my favorite line in the entire show was season 3. They were trapped in the him and, what's the chick's name that works at Ships Robin, thank you. Him and Robin were tied together, right? And they're like all loopy. They've been all drugged up, and like Dustin and Erica, the little girl, they come in, and Steve was like, all drugged up. He's like, "Oh, Dustin, we were just talking about you." I don't know. You'd have to watch it to think it's funny, but like little things like that just crack me up. Yeah, really crack me up. Oh, Peanut, man. Peanut's the best guest host out there. I think he went away. He's got big plans tonight. He's going to put some Farrah Fawcett spray in his hair so he can get ready. Let's see here, guys. One more. I think I already said that. Oh, Brandon, man. Hey, what's up? Good to see you. Thanks for joining, man. Let's see. Excuse me. Oh, Rocco, thank you for correcting me. What Joey was asking is that dividend income is for a single taxpayer up to $40,000, married 80,000. Oh, okay, you're talking about the tax perspective, I believe. It's tax stuff, the fun stuff. Okay, guys. Let's see. Last question. I think this is a really good one to end on. Journeyman, I'm sorry you joined late, but we're about to close it up for the night. What did I miss, dude? Everything. You missed everything, man. This was, gosh, man, I poured my heart out to everyone for the last hour and a half, and you missed it. I was really counting on you to be here for this. No, I'm just messing around. You honestly didn't miss much. You can go and rewind it if you want, but we had fun tonight. This was a fun live stream. I'm really, really stoked we got to do this, guys. I've said this a billion times so far, but I'm just so stoked to be back in business and back to normal, and also back to sipping margaritas, and yeah, a really fun live stream. So I think it's a really good place to wrap it up. Thank you guys so much for rocking with me this last hour and 20 minutes. I'm about to sign off, have a little dinner, and watch a little Stranger Things and call it a night. But I look forward to seeing you guys on Sunday, because we will be back. We will be back to regular scheduled programming moving forward, guys. I don't anticipate any reason why I wouldn't be putting out videos like normal moving forward. But yeah, Sunday video, have a really fun one planned for Sunday. Wednesday video, have another fun video planned for Wednesday. They're all fun. All these videos are fun. These live streams are the most fun, though. But anyway, guys, yeah, we're back, baby. We are back in business. So anyway, thank you guys so much for watching this live stream. Thank you so much for tuning in with me this last hour and a half. I hope you have a great Friday night. Hope you have a fantastic Saturday. And I want to say, keep up the great work, you guys. Keep investing, keep buying, and keep on rocking in the free world. I will see you. I will see you in the next video. You guys have a great weekend if I don't hear from you, and take care. I'll see you guys next